Hi, this is JG and I am here with Joyce Talk. Do the recent tech layoffs signal an industry downturn? In December last year, a poll by jobs portal Indeed revealed that 1 out of 4 Singapore workers are planning to leave their current employer in the first half of 2022. According to Indeed, these suggested a great resignation trend in 2022. However, it looks like the recent wave of tech layoffs have shifted the job trend to great layoffs instead.
The top tech companies are facing hiring freezes and layoffs due to cost-cutting measures. According to the tech jobs tracking site Layoffs.fyi, at least 66 tech firms handed out more than 16,000 pink slips in recent months. The layoffs come after tech firms hired aggressively in late 2020 and 2021.
Tech companies laid off more than 4,000 people in May, up 781% from total cuts in January through April, according to a report from Challenger, Gray and Christmas. Fintech companies, meanwhile, saw a 268% increase in job cuts, according to the report. In fact, as of mid-June, more than 21,000 workers in the US tech sector have been laid off in mass job cuts so far in 2022, according to a Crunchbase news tally. Blame it on bad economy. Basically, rampant inflation, supply chain interruptions, the Russia-Ukraine war, crashing stock markets and other red alert economic factors, coupled with a fear of recession, has led to a shift towards belt tightening now.
Imagine this. You just graduated from college and accepted a high-paying tech job. It's at a cool company, 6-figure salary, stock, and tons of time off. Nothing left to do but kick back and wait for that sweet tech cash to roll in, right? Wrong. Now, if you took an offer at crypto startup Coinbase or at Twitter, Redfin, or a handful of other tech companies, your hot new tech job might be going up in smoke.
Coinbase, the cryptocurrency exchange, once valued at nearly $100 billion, was initially planning to hire up to 2,000 more employees this year. In recent days, it has rescinded offers, implemented hiring freeze, and laid off 18% of its workforce. Singapore-based exchange Crypto.com will be laying off 5% of its workforce. Gemini Exchange announced last week that it would be laying off 10% of staffers, and crypto lending platform Block.fi said it is cutting around 20% of its workforce.
Well, the recent slide in markets slamming the tech sector with layoffs and hiring freezes hitting major tech companies. Among the big losers, more recently announcing Coinbase announcing layoffs that would cut nearly 20% of its staff alongside real estate tech company Redfin and Compass. Joining us more to discuss is Yahoo Finance's Dan Halley. Dan, we should point out tech kind of leading the gains today in the session in terms of the sectors, but it has been a brutal decline, especially for these high growth companies. And we've seen that reflected in the layoffs.
Yeah, and tech obviously kind of always the one to benefit the most and hurt the most.
Though major companies have not had to make drastic cuts, several are slowing down or freezing hiring, citing disappointing earnings and a battered tech sector, but continue to reassure staff that job cuts aren't imminent. A lot of these hiring slowdowns, like at Microsoft, are contained to specific departments rather than company-wide.
Yeah, we got to talk about these layoffs and these hiring freezes at some of these companies. And you said, obviously, we had Redfin Compass, Coinbase, they're having layoffs as well. We knew about Netflix for a while. Tesla, Elon Musk saying that they wanted to lay off some of their salaried workers. But then you have Bird Global, Stitch Fix, Carvana, Robinhood, Peloton. Those are names that have been kind of under the gun for a little bit. As far as slowdowns, not just layoffs, it's slowdowns as well. And that's what we're seeing big tech kind of contend with now. Intel slowdowns, NVIDIA slowdowns, Microsoft specifically pointing out their teams and office groups are having slowdowns. Lyft, Uber, Snap, Wayfair, Meta, Twitter.
In May, Microsoft told Bloomberg that it was slowing hiring for its Office, Windows, and Teams groups. The tech giant reported strong Q3 earnings with a 26% year-over-year increase in cloud revenue, but in early June, the company revised its Q4 revenue and earnings guidance downward, citing the impact of foreign exchange fluctuations. PayPal and Meta, on the other hand, have publicly announced hiring freezes, while Snap, the parent company of Snapchat, confirmed it is slowing hiring as it misses revenue targets. According to Bloomberg, Spotify will cut its hiring plans back by 25%, meaning the company will not stop hiring new employees but will bring on fewer workers than originally expected in the years ahead. Last month, Netflix also confirmed it would cut about 150 positions. Tesla, which employs over 100,000, will also be cutting down its staff. In May, Twitter froze hiring and said it would retrieve some job offers ahead of a buyout offer from Musk. Singapore-based e-commerce giant Shopee announced last week that it is laying off some in its regional operations and cut staff in Mexico, Argentina, and Chile, as well as a cross-border team supporting the Spanish market. For this year, so far, tech companies worldwide have laid off a total of 35,000 workers, according to Layoffs.fyi.
How much of this is just about the shareholder pressure that's coming in? If you look at a company like Netflix, it's just a resetting of expectations.
You have Intel, NVIDIA, they're dealing with issues related to chip availability. NVIDIA seeing some pullback potentially into the cloud space. Microsoft, they said that it's pressure from foreign exchange. We have Twitter, obviously the Elon Musk stuff, Meta, they're still dealing with the issues. I mean, they talk about Ukraine being a problem as far as ads go into the future, as well as iOS privacy changes.
LinkedIn news editor Andrew Moffett said in a blog posting, "This is the most significant number of lost jobs in the sector since May 2020 at the height of the pandemic. Much of the tumult has occurred in venture capital-backed firms as investors abandon risky bets and seek immediate returns." Should we be concerned? Should we worry? There is certainly a lot of anxiety right now about the job market. However, it is not all doom and gloom. Recruitment agencies also expect firms to ramp up tech hiring in the next 1 to 2 years with pay jumps of between 15% and 30%, up from 10% to 15%. To add on, the tech layoffs is not necessarily a bad thing. As experienced tech professionals leave tech firms, they either start their own companies or join firms in other sectors, which will help accelerate innovations either way. That is all for today. Hope you have liked this video. Do subscribe, share, and be with me for my forthcoming weekly videos. Thank you. Goodbye for now. Stay blessed. Be happy.